Hey guys, welcome back. Drip and Farm for Profit. I'm your host, Drip Coach, dropping knowledge bombs on all Forex Shark related projects. And in today's video, we're going to examine two quotes, one from TradFi and one from DeFi. So time in the market versus timing the market. We're going to examine that and find out if it's true or not. And does it apply specifically to DeFi and specifically to the Drip ecosystem? And related to the Drip ecosystem, quote unquote, price of drip doesn't matter. I think I had fell into that camp. I was trying to find videos where I would have used that thumbnail. I didn't find it. I didn't spend a lot of time, but I did do a search for price, and I have mentioned price at least 59 times in videos. So price apparently does matter. And it does get the views and clicks that people want to hear about, but I couldn't find one where I mentioned specifically price of drip doesn't matter. But I did find, shouts out to other content creators that did use that thumbnail. So we're going to find out if that actually is true. Price of drip doesn't matter. Price of drip doesn't matter. Won't recover. Doesn't matter. Doesn't matter. So we're going to find out, does it matter or not? Let's actually examine that in this video. But first, let's start with TradFi, because that's technically where all of our historic references come from. And we got to educate ourselves on these adages and the knowledge that they put out, because we apply it to crypto so that hopefully we can break free of this Ponzi-nomic, magic money that they keep printing, right? So if you're not familiar with the old adage, it's not about timing the market, it's about time in the market. That comes from basically saying that you need to be in the market, and if you're in it long enough, then eventually you'll win. So nobody can exactly predict a stock's future price, but that doesn't stop many from trying to do so. Study after study over years have shown that market timing does not work, and that time in the market is the way to go. So what does that actually mean? Timing the market means buying a security when the expectation of selling it at a higher price in the short term. Market timing investors are essentially trying to beat the market by outsmarting it, or so they think. Time in, relying on strategy where you don't try to guess when the market is at the lowest or highest. Instead, you buy the market knowing that your timing is probably going to be off, but that eventually the fundamentals matter more than timing. And then they give you 3 examples of why timing is bad, known as crystal ball. And we've seen that with volatility, and then crypto collapses and stablecoin collapses and all sorts of random stuff. Emotional roller coaster. Yes, if you try to time it up and down, it is one hell of a game to play, and it gets expensive if you're trading, right? And definitely it's even more so in crypto volatility, and if you count gas fees, if you're on like ETH or something like that, right? So I definitely do agree with this, but a part of me kind of pushes back a little bit, because crypto doesn't trade exactly like TradFi, meaning there are call groups and there are insider trading and stuff that kind of is allowed to take place because it's the wild, wild west. So you can actually time the market if you have that knowledge, or if you're tracking whale buys, right? So that's kind of the benefit with the transparency, where they will literally flag wallets and then try to time what they're doing, or why they're moving in and out of exchanges, or why all of a sudden a bunch of whales on ETH bought a bunch of Shiba Inu positions, or when Elon was going to tweet about Shiba Inu or Doge or whatever, right? So there is a little bit of timing that can be allocated if you have the skills necessary to kind of weed through the information on social media and whatnot with that. But of course, it is not a sound strategy, but you can indeed get lucky. But that's more DeFi degen kind of stuff. But I want to look actually at the history of drip. So specifically now, let's look at timing drip and time in. And like I said, I was looking to see if I could find any prices, but I already showed you some of our fellow content creators that said price of drip doesn't matter. And I thought I had subscribed to that as well. Maybe I said price of drip garden didn't matter, something like that. But I have since changed my perspective. Price of drip does matter, and I'm going to show you why. So, especially since we have seen 1 year of nothing but negative volatility. Now, caveat, big disclaimer. Technically, we should be near the end of that runway, and everything should be looking positive again, with all of the issues that were fixed previously, and better tokenomics on drip, better development, all sorts of stuff. So we should not experience this again. However, hindsight is 2020. So the price of drip does matter, and we've learned that the hard way from the past year. And here is a handy dandy spreadsheet to indicate that, right? So what I did is, of course, go through some dates. I went at the $5 range first because that was a great place to start. And I went and got the price of BNB and the supply off the native DEX to find out what the price was on the native DEX, and of course what PancakeSwap had. So that way we could see where we were at. So look like to a lot of people, October was a great opportunity to buy drip. And also in videos that I had, you know, I'm sitting in here saying like $100 is the floor and why this is a great opportunity to buy. And I'm sure you've seen other content creators say the same thing, right? So none of us were sitting there saying when drip was at 100, 25 to 100 to 50 to 75, we're like, now is it, now it's the floor, now it's the floor, now it's the floor. And we even thought the same thing at $5, right? So I'm going to show you over here that, yeah, we were still wrong. And then when we got to the dollar range, like right under $2 into the dollar, we're like, $1 is the floor. I'm going to show you how still these people didn't win. But ironically, once we got here, it seems as though it's stabilized. And again, now we're at the light at the end of the tunnel. We're at the end of the runway, about to take off. There are a lot of things in development. Yes, I know we've been hearing that for months and months and months. However, I do think, again, we have much shorter time in front of us versus what we had behind us. So I do believe in the next 1 to 3 months, we'll see some development for drip actually released. So that means that hypothetically, the lows are in for drip, but again, we've been wrong for an entire year. But anyway, let's look at what happened here. So if you would have bought drip, this is $1,000 purchase. If you would have put in $1,000, you would have gotten this much drip at the average price between these. So I took the average deck price between the native and the PancakeSwap decks. I didn't do $5 exactly. I just averaged both of these to get this. So you would have put $1,000 in and you would have gotten 190 drip. And then at the end of 130 days, which is basically today, so fast forward from that day purchase to now, you'd have 663 drip or 1465. You see how it gets up a lot higher as the price of drip goes down with that same $1,000 investment. So timing was definitely paramount in these instances. And of course, again, nobody knew this was going to happen. You'll have some people be like, I knew drip was going to 0 or going to $1 or whatever. Nobody knew, right? So we were expecting when your dollar cost averaging, you're like, okay, this is it. Okay, this is it. Okay, this has to be it. Okay, this has to be it. You never know. But here's my point. So this person here that put in $1,000 at what would have been, what we would have thought would have been a great range. Because remember, the pre-sale was like $2.75 to $3. So $5 is what you would expect from a long-term bullish crypto asset to stay above the pre-sale price. However, that person that put in $1,000 on that day would be down right now, as the price of drip is about 50 cents, down 67% of the portfolio. The person that bought in at $1, so literally like 30 days later, got it in at $1.50-ish, they'd only be down 27%. So they're doing a hell of a lot better. They waited 33 days and 43 days and had better timing. Of course, you wouldn't know that though, right? And then the person here who got it at $1, which we thought was also the floor, that would have been around 16 December. Average price would have been about $1. They'd be sitting about even right now. So they have almost about 2,000 drip, and at 50 cents, they'd have about even. So pretty close. But now here's the real kicker. So the person, these people with the shortest amount of time in drip, so time in the market, they actually did the best. So the people that got in this year, technically, so end of December, Christmas, and I just picked this date because this was like the 50 cent range. So these people are doing great. They are up. Right? So there's definitely an aspect of timing that goes along with it. However, big caveat again. So myself, I've been in 393 days. So I have definitely had my time in the market and I have 56% loss. So I'm doing better than this person who would have got in at a much cheaper price than me. But due to the dollar cost averaging and everything that I had to do, I've gotten a decent average, I guess you could say, so that long term, I do believe time in will be the final say so. And of course, again, with all the bullish things we have on the horizon, that is going to help make this look like it was a good play. But knowing what we know now and seeing these numbers here, if I could have gone back in time, I would have waited. But nobody foresaw all of the delays that we would have, and a year later still waiting on the UI. So now that we have that technically right around the corner, then this could be the final warning opportunity, not financial advice. All I can do is laugh because I've said this multiple times before. But again, all I can do now is look back at history, look at the numbers, and see that, yeah, around 25 December, you know, the people that were getting in around 75 cents, and seeing what we've seen within the community based off of the hype and speculation of Triple D, then I think we'll be fine. However, if you have been sitting on the sidelines this entire 400 days timeline, then I would wait for that announcement. Once that announcement happens that Triple D is going to launch, or the new UI is, you know, 2 weeks, 3 weeks, whatever, whenever he finally gives a date, then I think whatever that day is, meaning if he makes an announcement on 17 March for the release on April or whatever, then I think that 17 March day would be the lowest we would see. People would buy the rumor at that 17 March date and of course sell the news, but that means we're going to go up from whatever 17 March is. And again, it's hypothetical, and go up from there. So I don't see it tracing back down, because a lot of people have bought bags in at this stage. And remember, you double your drip price every 75 days. So they're not going to be in like really complete profits until at least 75 days from now. And most of these are just under a month and a half that they purchased. So just some food for thought about timing versus time in, and how crypto can maybe not always line up with the information that from TradFi. So you got to kind of blend these two things together. And what's most important, and that I learned from my comments, is that the typical investor in crypto does not come with the level of skill and common sense that TradFi investors built for where we're getting all of this data from, right? So crypto investors, specifically the DeFi degens, and not all of you out there fall under this bucket, but if you read my comments, you'll see some do. They are emotional traders. They are young and naive, and they are degenerate gamblers. So those types of people don't always make sound decisions. So therefore, you can't use history and logic and numbers and statistical data to make assumptions off of, because they're just FOMOing in, FOMOing out, buying high, selling low, like, you know, not doing anything that you could establish rhyme or reason on. So that's why some of this stuff doesn't exactly work. So you got to put all of that into your equation and then come up with a strategy that works for you. So all I can show you is that this does look promising, to see that these people, 2023 investors, we'll call them, look great. 2022 investors got wrecked and are still wrecked for the most part, but in 2021 investors did great as well. So 2021 was the year of drip, 2022 was the year of Animal Farm, 2023 is maybe the year of drip again, based off what we're seeing. So if you're sitting on the sidelines and you're wondering, this may be a great opportunity. Again, I know I said it last year, but I'm hoping I'm serious this time and it's the last time. All right, so I just wanted to share that with you because I thought that was fascinating. So if you found it value, you guys know the drill. Smash that special brother out, like, subscribe, comment down below, and until next time, live daily and achieve your impossible. See ya. Want to pay your in real life bills with crypto? How about send crypto directly to anyone with a bank account? Spritz Finance is a decentralized solution to be your own bank and connect your crypto earnings to real world bills and payments. They do not take custody of your assets and allow support on multiple blockchains and Web3 wallets. Sign up below using my referral link and you will get $50 back when you make your first $50 bill payment with crypto. Additionally, I will be using referral bonuses to airdrop, donate, or burn based on community feedback. Sign up now.